Hi there, you're watching Buy Now, Sell Now on ET Now with me, Shreyansi Singh and Cheryl D'Souza. And over the next 1 hour, we'll get all of your stock-related queries answered from both a technical as well as a fundamental perspective. But first things first, Cheryl, we've got to take a look at the markets and really twinning with the color that I'm wearing at this point.
Absolutely, the markets are twinning with you, but yes, it's also twinning with what the global markets actually did in yesterday's trading session. We were shut on a holiday, but global markets were trading. We saw that reaction coming in most of the global markets on back of what exactly is happening in West Asia, and now that impact is trickling in for Indian markets as well. We did start with on a negative note. We saw a good recovery play out, but now we are drifting lower, and there you go. Nifty is actually now testing 25,500 mark as we speak. You have Nifty Bank that's moving rightly in tandem with the benchmark indices, down by about 580 odd points. If you talk about the advanced decline ratio, that one is actually tilted in the favor of the declines as we speak, but it is the Asian Paints, Aish Motors, BPCL, Shriram Finance, Tata Motors that are under pressure in trade today, while on the flip side is the metal counters, Steel, SBI as well as Divi's Laboratories among the other set of gainers. But talking about the sectoral print and how is that looking to you at this point in time, metal index, like I said, bucking the trend, the only sector that is in the positive territory. A tad bit of shade of green on the pharma index because it is trading flat with a positive bias as we speak, but it's the realty sector that's taken a sharp knock, 2.6% lower. Your auto sector down about 1.8%. FMCG is also weak in trade. So that's the way how the markets are looking like at this point in time. I don't know if it's your jacket, but yes, it is a dark shade of red on the markets at this point in time, Shreyansi.
Well, absolutely. And like you rightly pointed out, it looks like the global handover had a lot more to do with it than just my jacket. But let's also take a look at the buy now, sell now lens then. And today we're going to be zooming in on the 6-step framework that is impacting F&O trade as well as key players in the capital market space. Let's pencil in the impact. Sharad is standing by with just that take.
Well, yes, as per Jeffries, the SEBI's measures has been taken to do a calibrated tightening in the F&O market, and the impact analysis states that roughly 35% of the total industry premium, which is on a weekly contract basis, are likely to get impacted. Now, the key deviations versus the earlier proposals which had come in the consultation paper, the two important things come out. A lower hike to expiry day of margins is of 2%, and earlier it was of 8%, and also the lot size hike, that is almost of 2 to 3 times. Earlier it was expected to be 3 to 4 times. Now the most impacted players are expected to be discount brokers, followed by the exchanges. But now let's look at how the implementation is actually going to pan out going ahead, and there are certain timelines which need to be understood. On November 20th, 2024, 3 important things will happen. Extreme loss margin will be hiked by 2% for short option contracts, and the minimum contract size for index derivatives is also expected to increase. There will also be rationalization of weekly index derivative products to product per exchange. On 1st February 2025, 2 important things will happen. The first one being removal of calendar spread treatment on expiry day, and also the upfront collection of option premium from buyers by trading or clearing members. Lastly, on 1st April 2025, intraday monitoring of position limits would be there. To simplify, discount brokers like Angel One Zerodha, there's a high potential impact coming in, and also Angel One in the listed space. Traditional brokers will have low potential, such as MOFSL, ICICI Securities. Exchanges, BSE, NSE, they will be highly impacted, while if you look at wealth managers, AMCs, depositories, RTAs and clearing members, there's expected to be little or no impact at all.
All right, thank you so much for that, Sharad, for putting that into context. Let's actually hear out the editor's take that's coming in from Nikunj Dalmia to understand this entire move coming in by SEBI.
What has come out as a regulation is in line with what the earlier recommendations were, right? So there is nothing new. Markets knew this was coming. And why is the regulator in this case trying to perhaps lean towards this direction? Because the F&O activity is becoming more like a systemic issue, and the fact that the kind of activity in the turnover levels, the turnover numbers which we are getting, especially from the retail level, I think is nothing, sort of scary. So I think the attempt here is to purely, it is really focusing on the participation behavior, at least by a lot of retail traders. The attempt here is to bring the volume down, take the hurdle higher so that there are some entry barriers which are getting created. The idea is to reduce weekly expiry is to bring the number of weekly expiries down, which will automatically have an impact on the total trading and the total volume transaction. The attempt here is to bring the speculation down. Now the regulator cannot put a gun to your head and say that you can't trade. All they can do is that they can perhaps make it hard, they can increase the entry barrier so that the participation comes at a cost, and this entire weekly expiry, which was leading to more speculation, and it was almost like a casino kind of an activity which has started there, that will start reversing. From a market standpoint, of course, if turnovers they come down, it will have an impact on direct brokerages. It will have an impact on liquidity in the near term. But then markets, I think, would look beyond that, because nothing has come which is scary, nothing has come which is new. It will be implemented in a very phased out manner, and I think this had to be done because F&O activity in India had almost becoming like a mass addiction. I'm using the word addiction very, very carefully and consciously here. Why? Because that is what data is indicating. The idea here is to change the behavior, and the idea here is to take the entry level higher so that the cost of transaction increases.
All right, there you have it. So that's the editor's take, but let's keep it going with the topic then. And we also caught up with Sunil Subramaniam, market expert, who expects volumes to be affected by SEBI's rules to curb F&O frenzy. Listen in to what he had to say as well.
I think the initial stage, as a reaction to this, volumes will be affected. So to that extent, one could expect that the brokers and all those would see some kind of a reduction in volumes and profits from their end. But over a period of time, I think they will readjust to this new reality, right? And I think it fees far more longer term things like investor education and disciplining and telling them how to go about this in a more structured way that will have an impact on the longer term story.
All right, so that's the view coming in from Sunil Subramaniam. Exactly, we're trying to take stock of what this move coming in from SEBI means for traders. But on that note, we slip into a break on this edition of Buy Now, Sell Now, because when we come back, we'll start taking your query. Viewers, don't go anywhere. Welcome back. You're watching Buy Now, Sell Now on ET Now show, where we get you answers for all of your stock-related queries. And before we just head to the query segment, let me just take a note of the flashes on the bottom of your screen, because sources have told wire agencies that BSE will retain the weekly derivative contracts that's linked to the Sensex. This, remember, that after SEBI had announced tighter rules for equity derivatives. Remember, this is source-based information that we've got from wire agency, and right now you have BSE that's holding on to good gains, about 7.6%. What sources are saying that BSE will retain the weekly options linked to Sensex after the new rules for derivatives. Source-based information from agencies. Also take a look at what Angel One is doing. With that one, I've seen a sharp recovery. It did open in the negative territory. From there on, it's bounced back. It's trading higher by about 6% or so. You have Investec also that's come out with a note hiking the target for Angel One to approximately 3,000 rupees per share. But as promised, this is a show where we get you answers for all of your stock-related query. Viewers, you can write to us on the WhatsApp number that'll be flashing on your screen in a short while from now. Do remember, each time you write to us, you mention your name, the stock that you're looking to invest in, mention that name as well. And in case you've already purchased the stock, mention the buy price, the quantity, as well as the time horizon. In that way, our experts will be able to help you better. Talking about our experts today on the fundamentals, we have Sharmila Joshi, while on the technicals, we will have Osho Krishnan joining us in a short while from now. A very good morning to you, Sharmila. And a lot has happened on the day when we were off. We had a lot of new specs to actually take a look at this morning, be it what is happening in West Asia, the escalations and the tensions there. Apart from that, you had that impending SEBI norms coming in for F&O trading, as well as this entire shift towards China. Which actually segment of this should one focus on while actually making that move while investing in the markets?
All these news flows will affect us, whether we like it or not. And perhaps the least impact would be, I think, with the developing situation in West Asia, because, I think that for the last couple of years, we have seen sort of war situations in different parts of the world, and markets have sort of dealt with them in their own way. I think what will impact us more, and what seems to be impacting us more, is that this worry that you could see a shift of FI funds to China because of the developments there. That could possibly impact our markets. And then I think the SEBI notification that has come. But honestly, I think that notification was expected, and market will take that in its stride. So, and I think even the China worry, it's a matter of time before you really see, what the shift of funds is. And let's not forget that for the last many months, we've actually been saying that it is the domestic money that has been driving the market. And if that is the case, then really speaking, there should be no impact. So let's wait and see. But according to me, those two news items are what are sort of impacting market mood.
Thanks, Sharmila, for breaking it down for us and explaining what really all of this really means for us then. But let's also kickstart taking all of our stock-related queries. Of course, we have Osho Krishnan, who's also joined us. But firstly, I'm going to come to you, Sharmila, because we have Gaurav, who's writing to us from Bangalore. A couple of counters on his radar then. He's talking about Reliance Industries as well as Bank of Maharashtra. For a period of about 18 months is what he's looking at. So what do you have in mind when it comes to both of these counters?
So I think Reliance really, it's a no-brainer. I think if it's an 18-month horizon, you should be thinking of holding. In fact, if possible, you should. Should be your portfolio stock. There is nothing to suggest that why it should not be a portfolio stock. There are businesses within Reliance which hopefully will get listed, and it is a sort of a company that's doing well. It rewards retail investors. So I have really, as I said, I think that should be a stock that you should consider for your longer term portfolio. Coming to Bank of Maharashtra, possibly here there could be concern because overall we've seen a bit of concern for banks as a play, given the fact that their numbers and deposits, etc. That sort of data has not been supportive. But in terms of valuation, Bank of Maharashtra looks all right. Numbers also seem decent. So I think in the near term, you could maybe see the stock move a little lower. But honestly, if you're talking of an 18-month horizon, then it's a hold.
All right, let's move on then. Let's take the next query. A very good morning to you, Osho, as well. And the next query that I have is coming in from Vikram. He's writing to us from Pune. He wants to know about IDFC First Bank. Is it a good time for a fresh entry for the long term? How is it looking on the charts to you, Osho? IDFC First Bank, do you think that he can look at this one for the long term?
Very good morning. Firstly, thank you for having me at the show. Well, now coming to the technical perspective of IDFC First Bank, then this counter has been witnessing some kind of corrective phase, and I expect that the short-term support is lying around the zone of 68 to 70. So that is the zone where the apt approach of accumulating this counter should be. So from a long-term perspective, yes, one can definitely start accumulating on a staggered manner around the zone of 70 to 68 odd levels, and can see a decent returns from here onwards.
Thanks, Osho, for that take coming in on IDFC First Bank. Sharmila, I'm going to come to you because we do have Veni who's writing to us from Hyderabad, a regular viewer of the show, and he's writing to us about Chola Finance, 100 shares at a buy price of 1,619. He's incurring heavy losses currently. Hold or average on this counter?
Finance holdings, is that right?
Chola Finance, yes, that's correct.
Honestly, I mean, in terms of valuations, it looks a little expensive, but the company is, the stock is one that I like. So overall, my view would be positive. Probably he'd have to extend his investment horizon a little. But yes, I think you can stay put in Chola investment.
All right, moving on then. This was coming from Chandrasekharan. He wants to know about Quest Corp, 500 shares at an average price of 845 rupees per share. He wants to know whether he should average at current levels or wait for some correction, or instead look to sell and book losses in this one. His time horizon is 1 year. Osho, what's your take coming in on Quest Corp? Are the charts indicating some sort of a recovery to creep in? Because in the last 1 month or so, this one has seen a sharp downtick.
See, overall, the cycle of this counter is very positive. It has been in a cycle of higher highs, higher lows. Recently, it has started showing some kind of profit booking, but that is the part of the cycle of making a higher lows. So in fact, on the technical perspective, approximately 720 to 700 is the zone which should act as a very strong support for this counter. So even for short term to medium term horizon, one can definitely keep their holding in this counter and can see a kind of a reversal or breather around the zone of 720 to 700. So it's a hold from a medium term perspective.
So Whole rating coming in on Quest Corp. Moving on, then let's also take Satya Vini's query coming in from Vishakhapatnam. HCC is what he's looking at, 1500 shares at a buy price of 52 rupees, higher than the current price, which is around 42 odd rupees. Sharmila, what is your take coming in here? Hold, exit, or average?
HCC is the stock we're talking about, right?
Yes, HCC.
I thought it was ACC that you were talking. Okay.
HCC, yes, that's correct.
Yeah, so I think once again here the valuations look a little expensive, and so I think in the near term you could see a bit of a downtrend on the stock. But if you have a recently longer horizon, I think at this price, I wouldn't sell the stock. My target on the stock would be closer to, I think, the acquisition price, which is about 50, 52. So given that, I mean, I leave it to the investor, but I think this would be the wrong price to exit the stock.
All right, so that's the take coming in on HCC, that is Hindustan Construction. Let's move on then and let's talk about this one coming from Ranjan, writing to us from Bangalore. He wants to know about Vodafone Idea. His purchase price was 16.5 rupees per share. Osho, what's your take? Should he look to average at these levels? He's been patient. He held on to it actually when the entire news flow turned positive, negative, everything for it. What's your take coming in on Vodafone Idea?
See, overall, this being a very volatile counter, on the higher end, it was having a very strong resilience around the zone of 16, 16.5, while from a long-term perspective, the support lies around the zone of 8.5 to 9. So that is a very strong support for this counter. But again, this counter hovers with news and there is no positive news in this counter. So overall, even if someone wants to have some kind of speculative move in this counter, then only can hold it with a stop loss of 8.5, and the time it surges beyond the zone of 14 or 14.5, one should try to exit from this counter. But overall, the technical perspective is not very much attractive in this counter. I would rather stay sidelines from Vodafone for time being.
All right, that's the take coming in on Vodafone Idea. That's the technical take coming in on Vodafone Idea. I know, Sharmila, you were hoping that I don't ask you this question, but no, I have to ask you this question. Given the fact of Vodafone Idea, you thought that things were only getting better for the telecom space, and I believe it will get better given the fact of the price hikes or the tariff hikes that you're seeing. And there's just one sort of roadblock in between, that was the Supreme Court order. But what's your take otherwise on Vodafone Idea? Do you think that this is something that one should stay put with?
So, honestly, this is not a question I'm worried about, because I've not really been in favor of this stock for the longest time. And I'll explain my reasons. Telecommunications as a space, as a sector, is something that I like a lot. I think whether it's Bharti Airtel, whether it's Reliance, we are seeing what is happening there. And more than that, what is happening there is the way we are consuming data and the way we are using our mobile telephones. So that definitely indicates that this is a sector to which is going to see an upside going forward. But the thing that goes against Vodafone, according to me, is that the fact is that you have a large debt portion to pay in a sector which requires you to have good amount of funds to invest to improve your infrastructure. We are seeing the shift that is happening from 3G, 4G, 5G, what have you, and all these require the company to make a good amount of investments. We are also seeing that they have lost subscribers. These subscribers have shifted either to Reliance or they have shifted to Airtel. So that is also something that we've been witnessing over the past year and a half. So very honestly, I've never really been positive on the stock. Yes, there was a brief period when you thought that maybe they could turn things around, but I think the recent Supreme Court judgment which you referred to has gone against them, because that again puts that whole the amount of debt that they have after paying all these taxes that they have to under question. So honestly, I mean, I think that if you have to and you should have a play in the telecommunications sector, I mean in the mobile telephony sort of sector, then it should be either Bharti or Reliance.
All right, so steer away from Vodafone Idea, and that's a take coming in from Sharmila there as well. Osho, I'm going to come back to you because Gautam is writing to us from Mumbai. 1,500 shares of United Spirits is what he has at a buy price of 965. What's your view coming in here then?
See, overall, this counter is very, very positive, has seen very strong cycles of higher highs, higher lows, is still having a very strong momentum. And if someone is already having at a buying price of below 1,000, then that's a very strong movement that we are witnessing. So stay intact with your investment. I expect that any dip, there can be a further profit booking that can be seen, but 1500 should be acting as a very strong support for this counter. So one should stay intact with their investment, keeping 1500 as a stop loss for short-term perspective, not for longer-term perspective.
All right, on that note, we'll slip into a break on this edition of Buy Now Sell Now. When we come back, we'll continue taking your query. Viewers, don't go anywhere. Welcome back. You're watching Buy Now Sell Now on ET Now, and let's continue taking all of your stock related queries. Then this next query that I have is coming in from our viewer Sana, who's writing to us from Chennai, and this one is for you, Osho. She wants to know a good entry zone for Mahindra & Mahindra, as well as she wants to know if it's a good time to buy Titagar wagons or Titagar rail now.
Overall, M&M is into a very strong movement. It has been hovering at its lifetime high zone. And with the starting of the festivities, we are expecting that from here onwards, there can be a decent sales number that can also see a very strong surge. So obviously, we are expecting that stock price should also move on the higher end. But looking at the technical perspective, the stock has seen a very strong movement and has been hovering at the uncharted territory. So better to accumulate it, but in a staggered manner. Only 20% of the capital should be invested at current levels. And if in future any dip comes towards the zone of 2950 to 3000, then one should try to accumulate the remaining capital in this counter. Overall, it is very positive, but the valuation on technical perspective is quite overbought. So I expect that if there will be any time-wise or price-wise correction, that will be providing much more insight for buying Mahindra & Mahindra. Now coming to Titagar again has seen a decent correction in the recent period and has also plunged below the 200-day SMA, which historically has seen very strong support for this counter. But I am expecting near about 1100 is the zone where one should try to accumulate this counter, because overall it has retracted more than 61.8% of the recent rally. So there can be a pause or consolidation near the zone of 1100 that can be seen. So one should try to again have a staggered manner of accumulation in Titagar around the zone of 1100.
Thanks, Yusuf, for that view coming in. Let's also go across to Sharmila then, because Sharmila, we have Rebecca who's writing to us from Kolkata. She wants a long-term view on protein e-government technology. What's your take here?
This is a stock that I'm positive on, because I think the way we are moving towards becoming sort of more demat, paperless, etc., as well as the increasing role of such products in the market, leads me to believe that if you're a longer term investor, this is a stock that you could be invested in. The valuations are a little expensive at this point in time, but if you're a longer term investor, then you can stay invested.
Next query is coming in from Himanshu, writing to us from Ghaziabad. Wants to know about Adani Power. Sharmila, 100 shares at a price of 57 rupees per share for the long term. How does this one look to you?
So this is, an expensive stock in the sense that it has run up ahead of valuations. But given that, I think that given the kind of business that they are in and the numbers that they have delivered, if you're a longer term investor, you can stay invested. But I wouldn't recommend a fresh buy on this price.
So not the time for a fresh buy on Adani Power. Osho, I'm going to come to you because we do have Shivani who's writing to us from Mumbai, and she's asking about PNB. 225 shares at a buy price of 130, hold or sell?
One should definitely hold this counter. There has been a very strong correction from the zone of 130, but overall near around the zone of 90 to 95 to 100 is a very strong support for this counter. So I'm expecting that in the coming period, yes, there is still further correction that can be seen, but around 5 to 10 rupees on the lower end, the stock can see some kind of consolidation, and there one can try to even average their buying price in this counter. So overall, this is into an under healthy correction, and this should be seen accordingly. And any dip towards 95 to 100, one can definitely try to accumulate it.
Coming right back to you, Osho, then. This next query is coming from Venu from Chennai. Wants a technical view on Escorts as well as Deepak Nitrite.
See, for Escorts, again, the view remains the same as M&M. This counter is also looking very positive, but at a very overstretched technical parameter. So I expect that if there will be any kind of correction towards the zone of 4,000 to 3950, that should be providing a decent cushion to this counter, and one can definitely try to accumulate. But comparatively, this will see some kind of slower but gradual up move from here onwards. So definitely a buy from medium to long term perspective on in some dip towards the zone of 3950 to 4000 odd levels. The other counter was which was the other counter?
Nitrite.
Deepak Nitrite. Oh, just a second. Again, this counter is into a consolidation, but overall, the chemical and fertilizer space is looking very positive. One should stay invested or can even accumulate this counter at current levels also. It is on a verge of giving a breakout. Any decisive move beyond the zone of 3000 can provide very strong thrust to this counter for approximately 250 to 300 odd points.
Coming in when it comes to both of those counters, Sharmila, I'm going to come to you because we do have Shravani who's writing to us from Hyderabad. She wants to know about Trent as well as GMR Power. A long-term view is what she's looking at, and she wants to know if there are any good entry levels that you also have in mind then.
So Trent is a stock that I do like, but I don't know about entry level because this is a stock that has it's been we've seen the kind of move that Trent has given. But if you're a longer term investor, what I would recommend is that you sort of start. You can have a little bit of an SIP approach and start buying little by little. And if you get some dips, if numbers are bad or there's some news, then you could sort of buy a little more. Because for the longer term, I am positive on the stock even from this level. Which was the other stock, GMR Power.
Yeah, GMR Power.
Honestly, I haven't tracked the stock, so I wouldn't like to comment.
All right, let's move on then. Let me take this query coming from Hemant, who's writing to us from Hyderabad. Two stocks from the from the auto pack actually, Osho. One is he wants to know about Tata Motors. Actually, let me take this to you, Sharmila, because Tata Motors, and we've spoken about this, the fact, one about Tata Motors DVR, that aspect, and also the fact that Tata Motors is now going to split its business into CV as well as PV. So wants to know whether it makes sense to go ahead and accumulate this stock right now for the longer term, as well as Maruti at around 12,500 levels is where he had actually entered. Do you think it makes sense to stay put with this for the festive season play?
Well, both the stocks I like, Tata Motors, Maruti Suzuki. Yes, I do remember we spoke about the DVR, and obviously I'm a shareholder, so we were not happy with the ratio that we were given. But having said that, I think that Tata Motors is the business that they're in, and the possibility for the business is very good going ahead. And honestly, I would stretch that argument to probably stocks in the two-wheeler space, CV space, tractor space, really across automobiles as a sector. Maruti Suzuki again trading at I think all-time highs, if I'm not mistaken. I don't think we've seen this price on Maruti Suzuki in a long time. But given the fact that they are leaders in the passenger vehicle segment, and nowadays there has been a little bit of a shake in the kind of fancy people had for EV as a space, and you are seeing it take its toll on Tata Motors. So these things will keep happening. When you are talking of a longer term approach and then holding on for, I'm assuming, like a period of 18 months to 24 months, then I think you could accumulate both. Again, I would say follow an SIP type of approach.
All right, so that's a take coming in on Maruti Suzuki as well as Tata Motors. I'm going to come to you, Osho, because Jitendra is writing to us from Noida and he wants to know about SBI Cards because he bought 150 shares at a buy price of 792. What's your take coming in here?
This counter has been seeing some kind of a strong reversal from the lower zone of nearly 690 to 700 odd levels. And currently it is facing some kind of profit booking at the higher levels, because obviously after a very strong consolidation around the zone of 700, the counter have started gaining a strong traction. But overall, from here onwards, I'm expecting that the trend reversal has been taken care in this counter, and further dip towards the zone of 740, 730 could provide very strong cushion to this counter. So from medium-term perspective, one should stay intact with their investment and can even accumulate further once it crosses the zone of 800.
All right, this next one is coming in from Nathik writing to us from Kanpur. For you, Sharmila, he wants to know between NTPC and Coal India for the long term, which one do you think is a better bet for him to actually look at? Both of them are PSU counters. Both of them actually have a big role to play when you talk about the energy aspect of the country. But what's your take coming on NTPC Coal India? From these two, which one should he look at?
So these are the kind of questions I don't like.
And
So
I
very
made sure to
honestly,
take
I
it to
think if
you
you're a
only.
retail investor, there's a very simple matrix which is dividend yield, and dividend yield for Coal India is much higher than it is for NTPC. So just by that simple logic, maybe you could look at Coal India over NTPC. But honestly, in terms of if you're a longer term investor, both stocks look fine.
All right. So if you are looking at the dividend yield play, then Coal India is a better bet when you talk about when compared to NTPC. But if our viewer has to go ahead and buy this counter right now, Osho, is this the right price?
For Coal India, yes, definitely this counter is into a very strong phase of higher highs, higher lows, nearing the zone of 500. So one can definitely try to accumulate at current levels also. And I'm expecting for short term, 540 to 45 should be the immediate target for this counter. But for short term, for longer term perspective, definitely looking at the trend, one should stay intact for higher targets also.
All right, and after having thrown that googly at Sharmila, we're going to take a very quick breather on the show. When we come back, we'll continue taking all of your stock-related queries, so don't go anywhere. Welcome back. Thank you so much for staying tuned in. Well, let's continue taking your stock-related queries. And Sharmila, I'm going to come to you. I hope this question's less trickier than the last one, because we do have Anup who's writing to us from Karwar. He has a couple of counters on his radar as well. He's looking at ONGC and Power Grid. He's wondering which one is a better bet.
I think this is equally bad. So I would outright say Power Grid, honestly, because while I do think that there is a lot of value in both the oil marketing as well as the downstream companies like ONGC, it's just a sector that I avoid largely because uh, we do see that crude being such a sensitive sector in terms of how it impacts inflation, etc. You don't really operate in an environment which benefits you the best, so there's always some tax that comes in, etc. So I think from that sense, Power Grid Corporation to my mind is better, though the valuations are a little expensive at this point in time. If you're buying fresh, then I think that you need to again sort of stagger your buying and use an SIP type approach. Anyway, market is correcting, so maybe you could get benefit of lower prices.
All right, let's move on then. And this one is coming in from Jay Krishnan from Kerala. He wants to know a good entry level for ABB as well as Ultratech for the medium term, both of them from the cement pack, Osho. Should he firstly buy both of them? Oh, sorry, sorry, they're not from the cement pack. I got confused with ACC. ABB being from the capital goods pack and Ultratech from the cement pack. Do you think now is the right time to invest in both of these counters?
Firstly, for ABB, then yes, ABB has seen some kind of very strong consolidation in the last few trading weeks, and after that, it has emerged very strongly above the zone of 8,000. So I'm expecting that from here onwards, there can be a gradual up move towards the zone of 8,700, followed by 9,000 in short-term perspective. So for short-term, yes, one can definitely try to accumulate this counter. Now coming to Ultratech, again, cement space have started gaining decent traction in the recent period, but it is again Ultratech has is yet to see a very strong breakout. So I would say better to wait for a breakout above 12,000 zone. Once it gives a breakout above 12,000, then we can see near about 600 to 700 kind of a higher targets on this counter. But there is very strong consolidation near the zone of 1100, 11,600 to 12,000. So this is a very strong consolidation zone. Better to wait for a fresh breakout and then to accumulate it for higher targets.
Right, Osho, I'm going to come right back to you though, because Subrata Mukherjee is also writing to us from Calcutta and he wants to know about Reliance Industries. He has a buy price of 3,014. Now, he's not mentioned how many shares he's purchased, but he's wondering if he should average at this point.
See, overall, Reliance have seen a very strong move in the recent period, but after that, there has been a very strong profit booking or correction. We can also mention that from higher levels. So currently, now the next immediate support for this counter comes around the zone of 2820, followed by 2800. So this is the zone where I'm expecting the fall to get cushioned to. So for short-term perspective, yes, a further 40 points of correction can be seen, but from a medium-term perspective, one should stay intact and even can accumulate for further quantity around the zone of 2820 odd levels. So it is a hold from a medium term or even for long term perspective.
Right. This one is coming from Seli Devi, writing to us from Kerala. Wants to know whether it's right time to invest in Cochin Shipyard. What's your take on this one, Sharmila? Do you think after the correction has played out in that entire space, this one actually seeing a sharper knock and is only drifting lower? Do you think that it's a good time to invest in Cochin Shipyard?
Well, I would wait a little, very honestly, because I think, while the company is good, the numbers have been decent, order book looks strong. The problem with this sector is that the orders are of very long duration, and for the positives to come in the numbers takes a very long time. So we had a period where there was great excitement for anything that was PSU, defense, etc., and you saw a huge run up in these stocks, which was, to my mind, a little overdone. So possibly these stocks could correct a little bit more from here. So it's a good stock. You should definitely look to buy it. But maybe you could take a technical level, because I really think that it's best to wait a little.
All right, so we also have Balan who's writing to us. Osho, I'm going to come to you with this one because he wants to know if this is a good time to book profits when it comes to small and mid-cap stocks. He's also wondering if you have any counters on your radar when it comes to a 6 to 12-month perspective.
See, overall, the market can see some kind of correction because overall there has been very, very strong elevation that has been seen in the last 3 cycles. So basically, the market has seen very strong vertical movement, and there has been approximately 38.2% was the retracement. This time, for the first time, backed by the global tensions and the new norms on F&O segment, the market has corrected more than 38.2% of the vertical rally. But overall, the market stays very, very bullish, and these kind of small blips can be seen. But if someone have some holding for a medium to long term perspective, one should not be very much worried with their investment, even in mid cap or a small cap sector. But that will be very much related towards what kind of a stock they hold. So I could not say above the overall picture from the space, but overall space looks quite decent. With some kind of blips, one can definitely hold with mid caps also. Now, for all the stocks which are looking positive from here onwards, so I expect that there can be various counters which looks very, very positive from here onwards also. Many PSU have started moving, gaining traction. Even some of the counters like Exide Industry, Amar Raja Energy, power sector, specifically Tata Power, NTPC have started gaining traction. So one should look for these counters. Even from the gas, IGL, MGL, both are looking very positive. So one should track these counters for short-term investments.
Right, coming back to you actually, Osho. This one is coming from Peter, writing to us from Trichy. He wants to know about Borosil Renewables. He's saying the stock has not been moving. Any near-term targets that you have for this one?
Overall, there has been very strong consolidation or lackluster movement that can be seen in this counter. So one should see a decent traction only once it crosses the zone of 550 on a closing or sustainable basis. Then only one can see some kind of traction. Overall, it is hovering near the cluster of its moving average. So there is no buying levels at present, but I would be preferring, if there will be any kind of bounce above the zone of 550 on a sustainable basis, then one should try to buy this counter for higher targets.
So we also have Shrikant who's writing to us from Hyderabad. And Sharmila, I'm going to come to you with this one. It's a recently listed counter. When you take a look at Bajaj Housing Finance, are there any, do you think you can enter at the current price? Is that something that you're looking at?
Yes and no. I think that definitely you could look to enter, but given the fact that this is a newly listed stock, I sometimes think that it's a good strategy to wait for a period of 3 months from listing date and then take a call. Simply because a lot of people who bought it for listing gains and so on, just give the stock a little time to sort of consolidate and come to a correct price. But overall, in terms of the business and the kind of company it is, yes, I think it looks worth investing in. But as I said, just wait a little before you buy it.
Wait a little before you buy. Bajaj Housing Finance is a word coming in from Sharmila. And also one of the reasons why this query was not taken to Osho, we cannot take this to a technical analyst. It's just a caveat for all of our viewers who hope that we can give them a level, is because this is a recently listed counter, very limited chart history. So it is difficult for our technical experts to give you a right level to go ahead and buy the stock. Let's move on then. This one has come from Sridhar, writing to us from Coimbatore. He wants to know whether it's right time to buy granules in at current price. Osho, he wants to know about some sort of a support or a resistance level.
granules, this counter have seen very strong traction in the last two trading sessions. So from trading perspective, yes, there has been very strong traction, and I can expect that from here onwards, the time it crosses the zone of 600, then there can be another 40 points of rally, but only on the short-term perspective. From a medium-term perspective, one can start accumulating in a staggered manner. Any dip towards the zone of 580 should be acting as a very strong support, while on the higher end, 670 to 80 is the short-term resistance for this counter. So for short-term, one can try to accumulate either on some kind of dip towards 580 or a breakout above 600 levels.
All right, Osho, I'm going to come right back to you because there's a chart check that we want on TCS because there's a viewer who's not written his name, but his buy price for TCS is 4,530. So what do you see on the charts for TCS?
See, overall from 4,500, the counter have corrected a bit, but overall the technical structure remains very robust. I expect that from here onwards, if there can be a further correction around the zone of 4,100, that should be the very strong zone to accumulate this counter from short-term perspective. Overall, the technical structure is very positive. For short-term perspective, better to wait for further correction of nearly 800 to 1,000 point to accumulate the counter, not 1,100 point to accumulate the counter. And on the higher end, I am expecting a resistance of nearly 4,500 for short term. But the time it breaches the zone of 4,500, we can see the cycle of higher highs on a broader time frame. So very positive from medium term time frame.
That's a chart check coming in for TCS. Thank you so much for that, Osho. Also, thank you so much for resolving all the stock related queries. Sharmila, I know we gave you a tough one today, but hopefully it makes our investors also pretty wiser while investing and parking their money in the stock market. Thank you so much, Osho, as well as Sharmila, for joining us on the show. And with that, viewers, we're totally out of time on this edition of Buy Now Sell Now. It's a goodbye from Shreyansi, myself, and the team that put the show together. Stay tuned. Markets at Noon is coming up next with Shrishti and myself.
There comes a time when your heart calls for you to arise. Plant your feet solid into the ground. Decide your own limits. And then break right through them. Become something more. It's my time to rise.